Good evening, everyone. Thanks for joining us. We're just getting set up here, so give me a moment. We'll get on the charts and we'll start looking at a few pairs together here. How's everyone doing this evening? So there's a lot of interesting activity in the market right now. There's a lot of opportunity we're seeing in the Forex market. So for those of you who are not yet in the Forex market, we're going to be talking about some Forex pairs this evening. And if you're new to it, it'll give you a glimpse of what we trade and where we make decent money trading Forex. But there's so much potential in the market right now that our goal, and one of the goals is why we do these live streams, is to really motivate you to start taking charge of your own life, taking responsibility for the decisions you make, and really putting in the effort to, take your future by the horns, take the bull by the horns, if you will. And, it's not about just hyping it up, but it's about reality that, success doesn't come by chance. It doesn't come by accident. It's something that you have to really work for. And the method we teach, you're not going to start trading and next month be doing 20%. It's not going to happen. But you can get to 20% if you put in the effort. So I guess the question is, if you're not there yet, if you're listening to the stream and you want to be a successful trader, but you're not there yet, are you willing to put in that effort? And, maybe it's going to take you 3 months or 6 months or 12 months. Are you willing to put in the effort for the long haul? And if not, then this isn't really the live stream for you. This isn't really the game for you, because it does take that effort. But if you're willing to put in the effort, you really do want to become a successful trader, then you're in the right spot, you're in the right place, and I encourage you to listen to the live stream, ask questions, and the Q&A. We're going to have a Q&A section. You'll be able to ask questions, and that's going to be an amazing time. All right. So how is the audio? Is audio all good? Everything coming in clear? There's no issues on that end? All right. You should be just seeing right now the BitRage logo and the backdrop, the splash screen. That's what you should be seeing right now. We're not on the chart yet, but we're going to move to the chart in just a moment. All right. All right. So have I been just talking and nobody's been hearing me? Is Joe just told me that I think I've been just talking and my thing was on mute. So if that's the case, I'm really sorry for that. I was on a rant, so that's too bad. Really sorry about that. You're probably wondering what I was doing. So I'm just gonna briefly go over this again. I'm not gonna say everything I was saying, but the reason why I'm starting off this live stream showing my trading journal for October, I did do a video on this, so I'm not gonna belabor the whole thing. But the reason why I'm starting off on this is just to establish the point that you can get to this point. You can get to the point of trading and making 20, 25, 30, 40, even 50% months. But the also just as important is to understand that this is not where I've always been. I've spent months when I first started trading and a long time after that where I was not making a profit. In fact, I wiped out my account several times. Not just in stupid trades, some stupid trades, but just trying to figure this out, trying to learn how to trade effectively and trading different methods. The important point I want to just really drive home before we move into the actual charting is that you'll notice here that I took, it should be 14 trades because the last trade I took before the month isn't on here. So 14 winning trades. I took 5 losing trades, so 5% of loss, and 10 break evens. 10 break evens, that's 10 trades that didn't do what I wanted it to, or I took a break even before they went. That means out of 28 trades, I had 13 winning, which is a decent, rate. But the important point here is that you can take 10 break evens, you can take 5 losing trades, you can take trades that don't actually go completely the way you want them to, and you can still make it. And that is an important point to realize, because I know one of the things that really got me when I was trading is I would take a trade, and let me scroll down here to find one of my losing trades. All right. Yeah, we'll do this one. Okay. So this trade actually did go into profit, but I was tagged out because of volatility. You'll notice the wick didn't actually touch my stop loss, but volatility it did hit. And it went on to 5%. So I actually could have had 5% on this trade, but I didn't because of spreads. The important thing is I used to look at these trades that I took a loss on, and I used to be like, it really would get me down. And I would do one of two things. I'd either stop trading completely and just be like, take a break and, or I would do revenge trading where it's like, well, I got to get back in. It's going to do it. It's going to work. I just got to get back in without having a clear sign to get back in. It's just like, it's going to go. I just need to get back in. And this is one of the most crippling ways to trade. You need to trade consistently. For instance, this trade, it appeared to me when I entered, let's see, it was on this candle right here. It appeared to me that this could be a bear flag to continue lower. I understood that it was at, the trend, and it could be reversing, but it looked like it was a bear flag, and I should have had time to get out. Well, it ended up taking me out for a break even. I mean, not for breaking it, for a stop. 1%, and it was a reversal. It did end up reversing. Now, you could look at that trade and say, you know what? This method doesn't work. That was a bear flag. It should have went. There was no reason why that shouldn't have went. Why did it do this? It's important to understand that not every trade is going to be a winning trade for you. If it was, you could take 1,000% out of the market every single month without even trying. But understanding that you can take those losses, you can take these trades that, okay, it's at the trend line, it's not the best trade in the world, but if it goes, it's going to be a great trade. Understanding that you can take those and you can still be profitable. So anyways, I'm going to stop rambling on that, but I hope that encourages you. If you're a little discouraged in your trading, stick with it, okay? Really stick with it, because it will pay off. I promise if you put in the effort, if you really put in the effort, it will pay off. Okay. So let's get into some charting. People were asking about BCH. So I'm actually on the Bitcoin Cash chart here. We're going to look at this for a moment. I don't like BCH. I think it's a pile of garbage, to be honest with you. But for those of you who want to trade it, let's just take a couple minutes and look at it. So this is what I'm looking at, kind of this triangle pattern. You know, it broke out of this. It broke out impulsively out of this. And it's kind of messy. It's actually very messy. But it does appear to be a continuation pattern. I would see this here. I would see this as a pennant, more of a pennant than a flag, to continue higher. And then I'm looking at this as a deeper correction. So what could actually happen is it could turn into this. And it could be just a large bull flag to continue higher. How long it takes for this to develop, who knows? That's what it looks like. It's important to understand that in crypto right now, because of how the volume is and the wash trading that's going on and some of that nonsense, that you really have to be careful. You really have to be careful with some of these things and tread carefully. As far as an entry, I would not feel too comfortable with an entry on BCH right now. If you're going to look at an entry, you could look at potentially this as a double bottom. If we look at it on the hourly, it is kind of messy. You can see some of these impulse and corrections within. So it is in a descending nature. The question is, and this is the important question, has it reversed, or is this forming a bigger corrective movement to continue higher? And that is the question that we have to be asking ourselves. The important thing, I think, to really pay attention to a lot of these crypto pairs is, first of all, they're going to follow Bitcoin. But secondly, some of these are very overvalued, in my opinion. I don't think Bitcoin Cash is worth $500. That's kind of a little bit, looking for the right word. Maybe I'm prejudiced or biased on that, but I don't really think it is. So some of these may be overvalued, and they may just continue a long correction down. So Bitcoin. Okay, so let's look at it. Let's look at it quickly on. Let's try Bitstamp. Let's see what it looks like on Bitstamp. Dave, if you tell me what chart you're looking at, I can look at that quickly. But it looks pretty similar on Bitstamp. Fairly similar. There's little difference. And see, there's Coinbase and Bitfinex. That's what I was looking for, Bitfinex. Yeah, they're fairly similar. I mean, I would say that pennant looks a little better probably, but they're pretty much, it's the same pattern. It's a descending corrective movement. And again, the question is, how long can this move lower? Right now, I would be looking at this to possibly have a third touch. But that's kind of what I would expect for Bitcoin Cash. Again, we really don't have as much information as I would like for this, because like I said, this could develop a larger flag pattern. And if it does that, it's going to take a little while to develop that out, but we would need to see confirmation of that. And one of the confirmation points would be either at the double bottom like this or at the trend line for it to do a reversal and to move up. And then we might get that double top. We might move back down, or we could just continue from here. Those are possible. It's also possible we just continue correctively down through here. Right now, there's no sign of a reversal. So if you're looking to buy this, I wouldn't see there as any opportunity to buy this at the time being. on the daily. All right, so you're looking at that as a double top. Yeah, that's, you know, it obviously reversed from that point. So I'm sure that a lot of people are looking at that as a double top. That's why looking at this bottom here is totally possible. On the daily, we do have that impulse, and this is the correction. So looking on the daily for it to move higher makes sense. That's why I'm saying that on the 4 hour and 1 hour, for it to develop that larger bull flag is possible. You just have to look for a solid entry on it. So that'd be something I'd be looking at. On the daily, it does look a lot better as far as a correction. But again, this correction can move a lot deeper, especially if it follows Bitcoin. All right, let's jump into Bitcoin here. All right, my chart's a little bit messy here, so apologize for that. But on the daily, we've been looking at this pattern for a while now. Basically, this descending wedge type pattern. And I know there are people, let me see if I can draw this out a little bit here. I know people are looking at that type, more of a triangle formation. And they're looking for this to move, Bitcoin to kind of move in this area and then bounce. And I think there's quite a few people I've seen YouTubers talking about that. That is possible. It's something to consider, and it's definitely not something you want to ignore as a possibility. There's nothing wrong with having that trend line. It does have 3 touches. That is valid. I don't have an issue with that. What is important right now to understand is the volume right now is ridiculously low, and of the volume that is ridiculously low, a large percent of that volume is fake wash trading on exchanges like Bitfinex. People talk about BitMEX and they'll talk about all the large shorts and longs that get liquidated. A lot of those are fake. A lot of those are BitMEX actually trading against its own engine, or using its engine to trade against its the trading book to inflate volume. So it's important to understand that. With that in consideration, as we drop down on the lower time frames, we do see periods where you have this, like this right here. It was quite clean. You have a very clean picture. You have impulse, correction, impulse, correction, very clean correction. This was a very clean correction. That would have been a great buy setup. If you didn't get that, that would have been a really great buy setup. And then impulse. And this is a really nice setup as well, but you'll notice that it moves out correctively. So you'd have to be very careful on that one. You might have taken a break even, or been tempted to get out of it, but it does actually move higher. It moves higher for the last leg, and then it reverses. It reverses at that trend line. So that was very clean for Bitcoin. Then moving out, we get a tiny correction, and it appears to me, it's a little bit messy, but it appears to me that we are forming more of this continuation pattern, a sloppier continuation pattern. Again, we need more, information, but it does appear to be a larger correction. So could it just drop from here? That is totally possible. On the 4 hour, we are seeing bearish traction, but it does have that arcing nature, which could possibly give us that move back to the upside, retest this, and then go. So it's important to realize that if it does that, it gives us a clearer and confirmed bear flag, and the likelihood of it dropping is a lot higher than from here. So this is a little bit more of a risky entry if you were able to short Bitcoin than from the top. But it is possible it could drop out from here. If we drop down to the hourly, and we can draw this out a little bit, kind of get clarity on the patterns within the patterns. So, all right, so that looks to me, and it's important to try to figure out or identify the phase that you're in, okay? So this is definitely impulse, right? So we come from impulse, correction, impulse, correction, impulse. This is corrective, right? So we get that reversal. And we could say that this is impulsive, right? And this is corrective. So it makes sense that this could move to the top here before dumping. That makes total sense to me. Doesn't mean it will, but if it does happen, you're not caught off guard. You're not wondering, well, why did that happen? Because it is a corrective movement. But understand this, okay? So this is a small impulse with a correction for a short-term, possible short-term buy. It's not the greatest, but it could turn out to be. But you got to understand this right here is the impulse. Then this is the correction to move lower. So that's the most likely scenario to play out right now. To see the smaller patterns play out within here makes sense. It's possible it's going to happen. We got to be prepared for that. But to see this as the bigger pattern right now and understand that the bigger pattern is impulse to the downside and a larger corrective movement to move lower. How long this takes to play out remains to be seen. But that's kind of what I am looking at. That's what I am looking at as the most, in my opinion, most logical. Now, to get a buy setup on this, it would be nice for this to move up to here and then to get a reversal. If we get a reversal at that, it would be a nice setup to short. If you get a very tight corrective movement along the trend line here, I'd be looking at the possibility for a buy, but you want to be careful that you don't get caught in well, it appears to be a buy setup, but ends up this pattern is just fulfilling and it drops. But definitely, if we get that impulse up, I'd be watching either this area here or this area for that reversal to happen. So that's what I'm looking at. As we discussed previously, when we get a break, and we had that break from this channel, it's a 90% chance to get to the low here, and we have not got there yet. We will get there. It's going to happen. It's just how long it takes to get there. So this could develop out, form a bigger corrective movement. You could see this, and then it could drop. That could happen, but it is going to get to the bottom of this. That's going to happen, and most likely we'll get to the bottom here and retest the 6,000 area. That's pretty much in the cards based on the patterns we're looking at. If you look at previously, this happens. It's a 90% chance. So this pattern here, and it's ascending flag pattern, we get to that bottom area. We actually we test a low, a previous low down here. So we actually break that low. This pattern here, it's ascending channel. We don't quite make it yet, but then this pattern here breaks down, and then we do retest that area. Not quite to the bottom, more so this area. So why are we so sure that it's going to go to that bottom again? The reason is these patterns are time tested. Now, I don't know why I have, there, I had two trend lines in. So when you look at this over time, and Bitcoin it's a new currency, crypto's new. So there's a lot of volatility in cryptocurrency right now that makes weird movements. And that's why we have to wait sometimes for things to develop. But even in Bitcoin, we're seeing that these patterns play out, and there's a 90% chance statistically that when you have that corrective movement in a channel and it breaks out impulsively, that you're going to retest that low before, not always before you develop something else, but eventually you're going to retest that low. So again, in this instance, we form a bigger correction, come back down, and we retest down here. Not quite to the low, but to that area. So it's a 90% chance statistically. This is from mostly Forex, but after backtesting Bitcoin, it's still true. I mean, if you look at the patterns, it just happens. I mean, like for instance, even this pattern here, it's an ascending, a very tight, a very steep ascending channel. And not only do we test that low from the beginning of the channel, we actually break it and we actually form a bigger channel, a descending channel. So that's the reason why we are expecting that to happen. And the other reason is if you look on the daily, there's really no reason to see anything else but more downside. If we were to break out of this triangle aggressively, impulsively, and then get a confirmation in a corrective movement to move higher, then we'd say, okay, maybe we're forming something else, and then we'd have to look at that. But we're in this tight corrective movement. We're not making progress, since the beginning of September. We really haven't made any progress here. And the reason is there's really not much going on in crypto right now. The smart money is not coming. I know people keep saying that, but smart money's not coming in. They're not going to come in until we get the regulatory issues addressed. So that's another issue to talk about. But that's what we're looking at for Bitcoin. Again, keep an eye on this pattern, how it develops. If this breaks out impulsively, watch it. I don't know why my trend lines keep moving on me, but watch it and look for an entry if you are shorting the market. But if it does break down here and you're looking for reversals, I'd be looking for this. If it moves down like this, just correctively moving down, then there might be a chance that this will reverse and move back to the upside, and you will be able to get an entry. If Bitcoin moves back down to 6,000, even if it's going lower, there's a decent chance around 6,000 of getting an entry. I wouldn't count on it, but I'd be looking for it. So don't just set an entry down there, but be ready for an entry around the 6,000 level, because everyone's expecting it to always bounce at that level. So it is likely it will bounce before going lower. All right, so that's Bitcoin. Let's look at a couple Forex pairs. If you have some pairs you want us to look at, then you can drop them in the chat and I will look at those pairs. So we're looking at Euro USD here. Now, before I get into Euro USD, actually, let me look at the DXY. Let's look at the DXY because it's important to actually correlate these two. So some interesting things on the DXY. So we had this descending channel. We were watching this for a while. It broke out very impulsively. Those of you who got involved in these trades on the move up, there was a lot of potential in those trades. It was just really, really a lot of potential. It came out of that impulse in a very corrective movement. We have that arcing nature. It reverses down. From there, we have the reversal candle setup. That's a beautiful setup. You have the 3 touches. It's ascending nature. It's a very beautiful setup. So when you see that on the daily, then you look for entries on the hourly, and that's what we did. So we sold that on the way down. You have this bear flag on the daily. It continues down, but you start to see that the momentum to the downside start to taper off. So we're expecting it to reverse, and it reverses again. Important, we were talking about earlier. Does it get to that low? It hasn't gotten there yet. So we're expecting that even though it's developing, we're separating these two patterns. We're still expecting this to come back to the downside and to at least test this low or test the bottom of our channel. So that's what we're looking at. That is still in the cards to happen. We're still in this ascending corrective nature. There is impulse within it, but it's ascending corrective. So we're looking for this to continue the downside. What's interesting is on the hourly, we just had, you'll notice this green doji type candle. It's a gap. So it gapped down. It almost filled it in, and then it's reversing. I'm actually in the trade on Euro USD. I got in at the reversal, and I'll show you that on Euro USD when we get to it. The reason is, I'll show you that in a minute. But so this is the hourly. So here's a couple of things to keep in mind for this, because I know a lot of you are looking at Euro USD. You want to know, how to get involved in these trades. So I pulled back this trend line here. So originally the trend line would have went through right about there, but it doesn't make sense to just cut through price action like that. So what I'm doing is I'm pulling it back. I'm waiting for this to develop. It does look like a reversal. So what we can do for now is we can do that. And it appears it's moving back in the pattern. Now we have to be careful, because what could happen is this could develop into just a tight flag like that, and then it could come up here to retest this high and then go. So it's important to keep that in mind, that that is a possibility that could happen. We have to keep in mind there is a lot of bullish what do you want to call it? There's a lot of bullish attitude in the market right now for the DXY. There's a lot of good news, if you will, for the DXY. And that's one reason why we don't really pay attention too much to news, because it can throw us off. If we were looking at just the news, we would just see this as, most likely, just see it as a buy. And while there is a buy that is possible, ultimately this is coming to the downside fairly soon. It is unlikely for this to have any sustainability to move too much higher. Now, in the long run, in the long term, are we going to see this move up? I do believe we will. Man. I do believe in the long term we are going to see this move back up, and I do believe we will test $1 again. And it's interesting because it does appear that within the next year or two, we are going to see the euro and the USD, the DXY, possibly pretty much become equal, right around $1, pretty close to $1. It's possible that they're going to come close to touching each other. But it'll be interesting to look. That's a ways out. But right now, this is a sell. We are looking for this to be a sell, just looking for the setup. Okay. So on the hourly, we do look like we are getting that reversal. Let's go over the Euro USD. Do we look at activity on the pair to see if it might be setting something up too? I assume you're talking about if we're looking at the DXY, if we look at the pair we're trading, for instance, Euro USD or USD Yen, to see the activity. And if that's your question, absolutely. For Euro USD and DXY, they're pretty much inverse. So whatever's happening on the DXY is happening on Euro USD and vice versa. Depending on the time, sometimes Euro USD will pull the DXY, sometimes DXY will pull the Euro USD. So one will move before the other, but they always move together pretty much. As far as the other pairs like USD CAD, USD Yen, Aussie USD, they do move with the DXY, but not mirrored. So you might see the DXY drop, 50 pips, and yet USD Yen doesn't. So it's important to understand they don't mirror. The other pairs don't mirror. But it's important to understand what the DXY is doing. All right, so I'm going to show you the trade that I'm in. You'll notice that I had a trade here. This was a bear flag. It turned out to be a bear flag, but I was looking at it as a reversal. I was trying to get in on this candle. I was looking at it as a double bottom. It was a really risky entry. I knew it was really risky. I knew that there was a possibility of it going lower, a decent possibility, but I was not willing to let the trade go. So I was willing to take the 1% risk, knowing that if I didn't get in, I would get in on the bottom. Right now I'm in on this trade, so I took a 1% loss on that, but I'm in on this one. And let me see where we're at right now. We're about at 0.5%, so we're not, at any great percentage yet, but it is moving up. My concern is right now we are moving slightly corrective. I would like to see some more impulsive movement coming out of this, and I do think that's going to happen as we move out of our holiday here in the U.S. into actual banking trading, I do think this is going to impulse out nicely. Can we come back down and retest this double bottom? Yeah, we can, but I don't really see a need for it. I don't really see that as a need. So that's why I took an entry on it. I am in at that reversal candle, and probably the question you would have is, would I let it move into a loss or not? And that depends on how this moves over the next couple hours, but most likely I would take a break even at this point. But I really do think there's a decent possibility this is going to move from here up to the upside. If it does move lower, again, it's going to be short term. I do not really foresee the possibility of this moving too much lower. Trying to look back here. There's really no reason for this to move too much lower besides catching people off guard. We do have the 4 hour. It hasn't closed yet. If this 4 hour closes bullish, that is a really decent signal, a retrace signal. So that's really important to look at. So as far as Euro USD, if you're not in it right now, I wouldn't just jump into it. That's very risky. What I would do is, what we want to see this move back into the pattern, and we want to see it form a correction, okay? If we see it form a correction, especially right on the trend line, that's going to be absolutely beautiful. I would take that 100 times. Absolutely would take that 100 times. And if we can get in a nice tight stop here, let's say around 15 pips, moving to the outer trend line here is 14%. So waiting for the entry rather than just jumping in on it is going to pay off for you. That's why I was willing to take a 1% loss, because I know that right now I have 11% potential if this continues to move up, and it's going to give me a correction eventually here. I'm going to take another trade on that, and I'm going to get my 1% back. So I'm not too worried about that. But this is one of the trades that I'm definitely watching. I'm going to scale into those positions as we progress. So let's look at a couple other USD related pairs. USD yen. This is an interesting one too. We're in ascending channel. It's a really interesting pair to me because we are looking for downside, and it could go from here. We do have 3 touches here on the bottom, but we do not yet have the 3 touches on the top. Now, you could draw out something like that, and you'd have 2. You could almost say that's 3 touches if you wanted. That's possible. Still, it looks to me like there's a possibility that we get a little bit more upside. If we don't, I would like to see this correct like this. That would be a beautiful entry. If it doesn't, if it impulses out again, we want to see that corrective flag to confirm it. So either way, I'm looking for a flag. This is not an entry I would take here. I would have taken it here. I should have taken it there. I just wasn't at the computer to take it. I missed that trade. Because that's basically a double top. It did break the top. That would have been a decent trade. But watch this one because it is possible. It depends on how the DXY acts for sure, but it is possible that we get this reverses and moves back to the upside, either to test the trend line or to test this previous high. If it does that, a reversal on this area is going to be amazing. So any entry along those areas, the previous highs, are really, really good entries. They have a higher probability of playing out. But it is ascending channel. We do have the ascending within the ascending. But if we're looking at it as it is, we do have that impulse. We do have what looks like a possibly corrective movement. If we're looking at it like this, it could have more upside before coming down. So this could fulfill as a flag, move to the upside, and then come down. So we're going to look at that. Basically, the important thing is, because I know a lot of people, they'll listen, they'll be like, well, you said it could do anything. Well, no, I didn't say it could do anything. I'm giving all the options that I see the potential for. And the reasoning behind it. This is an impulse. So this could be a corrective movement to continue higher. We know this is going to sell. This pattern is going to sell. It's just looking at the possibilities. versus the probabilities. Okay, so looking at this on the daily, so you get a little picture of what I am talking about. Again, you have this ascending nature. We're looking for this to move to the downside. And here's the thing. If this does reverse and we do retest this high, we're going to have a really, really powerful sell. It's going to be a big sell. So we're going to see these big sells come up. They may take a while to develop, but we're going to see these big sells. And it's important that we forecast and we understand. It's like when we were looking at this. This takes, over a year, 2 years to develop. You have that impulse, correction, and then impulse. Let's say that this is forming a correction to move higher. That's still going to take, into 2019. And along those ways, you're going to have all these movements to take advantage of. So, it's important to look at those things as well. So this looks like it's coming to the downside. It's important to keep an eye on what it's doing here and understand the possibility of still breaking that high. USD CAD. Thanks for the happy birthday, Alex. USD CAD. So USD CAD's interesting here. USD CAD's very, very impulsive. If you look here on the daily, it's like you see these impulsive movements. It's like amazing potential in USD CAD, but it can be very volatile. So it is important to understand what you're trading, the entries you're taking for USD CAD, but it can be very powerful. We are seeing a reversal on the daily at that trend line. We got to let the daily close, and I would like to see some follow through with that. What we are looking at so we have the impulse here. We have this as the correction. So we're looking at this as possibly the impulse. So what would we be looking at? There's several possibilities here. So we're either looking at this to form into a correction, a big correction along this line, or reverse down here, and then move back up. Those are possibilities. We could definitely test this high here. That is not outside the cards. We got to keep that open. But we are looking at, on the daily, we are seeing that reversal sign. But I am seeing this as impulse and correction. We are appearing to break out, but so far this is very corrective in nature. We are seeing a little impulse here. If it's going to continue, it needs to either show us a flag, a tight flag, or we need to see some follow through. But if we look at this on the weekly, this is what's going on the weekly. So we have that impulse. This is just corrective. But you'll notice that we had ascending channel. It dropped. Ascending channel. We're looking for this to drop and then move higher. So we are looking for that big move to the upside, but before it, we are expecting that this is going to move to the downside. It doesn't have to. It could literally move from here. That's not the most probable, but it could do it. And if it does, this is the weekly. It's going to tell us, okay? It's going to tell us that that's going to happen. To see this double top at that area is very possible. If we double top, I'd be looking for entries all day long to the downside. Get that third touch and then that nice rebound to the top. It's going to be a beautiful, beautiful sell. It's going to be a beautiful buy. And USD CAD's going to give you a lot of potential. Just really being patient for the setups and not rushing the setups. So on the hourly, we are seeing that reversal, obviously, because the DXY is moving to the downside here. So we are seeing that reversal. If we get that reversal down here, I'd like to see, again, a corrective movement, and I will get in on USD CAD for sure. That would be a great entry. That would be an awesome entry. So I'm going to move this trend line like that. Okay. So again, trades like this, if we get If this moves down and then we get that corrective movement along there, we can get in at the top. I can get my thing here. Get in at the top. We're going to need 25 pip stop. To here, the bottom of the channel, we got about 5%, and then there's about 13% of the bottom. That is totally possible to see that happen. It's just waiting for that entry and not rushing that entry. Okay, so that's USD CAD. Someone had mentioned, I think, Euro Kiwi. I think someone had mentioned Euro Kiwi. So I'm going to look at Euro Kiwi. It's one of the ones I'm looking at, but it's one that I am not ready. I mean, I don't see an entry for me right away. I think it needs a little bit more time. So this is kind of what we're looking at on the daily. We have this larger pattern on the 4 hour. We have that ascending, and this was a really beautiful channel. The reason why I really love this channel is because it fulfills the pattern perfectly. You have the impulse, you have beautiful correction. It does impulse out here and then retrace. That's volatility. We knew that was happening. We get this impulse. It's more corrective, so we should be looking at the possibility that this is losing momentum. We get that corrective movement to the downside and the final impulse. We should be expecting this to sell. 3 touches. It fulfills the pattern. It fulfills the wave pattern. Impulse correction, impulse correction, impulse reversal. 3 touches. It didn't break that previous high. It doesn't always. But what's important is that we did get that nice reversal candle to completely retrace, and getting in on that would have been a good entry. It would have been a great entry as far as Euro New Zealand. So that's on the 4 hour, but what's going on right now? So right now we're at the beginning of this correction. Okay? So we have to let the market tell us what it's doing from here. So we're looking at the possibility for reversal. It looks like the possibility, this is forming a really tight bear flag. It's not a buy setup. I mean, it's not a sell setup in my opinion, because it could just have a little tiny downside and then reverse. So I'm not looking at that in any way, shape, or form as a sell setup. What I'm looking at is for this to, for any reversal signs. So that's what I'm looking at for this pair. If we look at the weekly chart here, it's a little bit more, I don't want to say messy, but it's different than, for instance, Euro USD. It's not as clean as Euro USD, but if you look at this, you got definite impulse. And for literally the last 8 years, we're forming this large corrective movement. Within, obviously, there are impulse and corrections. As we get down to the daily, that's why we have to ask ourselves, is there more downside potential here? There is. There definitely is. The question is, are we coming to the downside now? Or will we reverse, move to retest that high, and then come to the downside? Those are the questions you have to ask, because you can look at a channel, you can say, okay, on the daily, we are coming to the downside. Again, you have to look at not only possibilities, but probabilities. So if we look at what this is here, you know, that's definitely an ascending channel. So then we would be seeing this as impulse correction, impulse correction. It makes sense for this to come downside. We impulse out. So that's what the cards are looking at right now. Again, on the hourly, we just need some follow through. So we're at a critical point where we could reverse and move back to the upside. or we could form that larger correction. And if we're going to move down lower, it is quite likely that we would see a larger correction, whether it happens there or we break down below and then it happens. But it'd be quite likely to see that larger correction. And if that happens, then that gives you an entry point. You're not just jumping in on the trade. But that's what Euro Kiwi is doing right now. We are at that low of the correction. So it's important to let the market tell us from here what it's doing. Allow us to really give it that opportunity. And that's why it is not my primary focus this week, but it is on the list as far as one to look at. It's definitely one I'm considering. Aussie yen is another interesting one, and the reason why is if you look at this on the daily. So again, we have this descending nature, but it's important to look at this not only for what it is right now, descending channel, but what it could be. And that's why this is where you get clarity in the market. This is where it really starts to click, is when you not only say, okay, this is descending, it's breaking the upside, but it's understanding what it could develop. So if we look at this as an impulse, definitely as an impulse, and then we look at this as a correction, if that were to happen, something like that, what does that give us? It just gives us a huge bear flag to move to the downside. So within this, we will see moves to the downside, big moves to the upside, before it actually goes, most likely. And because this is a descending nature, we expect that to break, to the upside eventually here and to break that previous high. But that doesn't mean that we're just going to go to the moon from here, to steal a Bitcoin term. What's important is to understand what the chart is telling us, to really pay attention to the possibilities. So the possibilities is, I'm sloppy at drawing, but the possibilities is that could form just a larger corrective movement, and it would turn into a ascending flag pattern to move the downside. So these things develop and they form into bigger patterns, and we have to be ready for that. We got to be careful not to just get caught in our trend lines and be like, well, this is what's going to happen. We broke impulsively out, so we're going, all the way down. This was an interesting trade. It's one of the trades I didn't take it, and the reason I didn't take it is because it wasn't the best setup in the world. If we were to drag this down to this area, we could count that, but I feel like that's a different pattern. But we only have 2 touches. We don't really have more than that on the bottom either. And then at the end, it does form that descending nature, which gives us the impression it could have broken the upside, retested, double topped, and then went. It does look like that is still a possibility, although it's on the lower end. We probably are just forming a correction here. If we do, I would be getting in on that to get the sell, because I'm not in on this trade. I did notice this. It was a 6-hour correction, and I was tempted to take that, but I didn't take it. It turns out that would have been a decent trade. It would have at least turned into a break even, if nothing more. And it did come from an impulse. It was a small impulse, but it did impulse, correction, impulse. This is probably a correction, impulse, and then we'll probably get a bigger correction before moving lower if we continue lower. So Aussie yen, looking for more downside on the Aussie yen. On the 4-hour chart, we do have basically those 3 touches. We do have the double top, triple top area in the middle. So to see this move back to the downside makes sense. We are impulsively breaking out of that. But again, let the market tell you what it's doing. Let it give you clarity before you make those decisions. It's also important to look at what's going on the 4-hour here. We do have that, again, that descending nature. So I guess the point is, there are a lot of sell setups and a lot of buy setups, but don't get caught in. Be willing to adapt. So let's say that you get in this trade and it moves to the downside. You know, it moves to the downside, and then we come through here and we get a reversal here. Are you going to change from a sell to a buy? Are you willing to make that transition and be like, okay, this has upside now? Or are you going to be emotionally caught in your sell and be like, no, this is going to continue going? That's where a lot of people get hung up, is they're not able to switch at pivotal points. So that's what I'm looking at here. We need to see follow through for this. If we don't see the follow through, it could be just developing out correctively. And it'd be important to look at that as well. If you have any pairs you want me to look at, feel free to drop them in the chat. I'm not sure if I'm looking at the chat, and it seems to me that it's lagging on the chat, but all right, so New Zealand yen. We'll look at Kiwi yen here. Let's look at this on, so the weekly, again, we don't have a really defined weekly channel. This is what we're looking at, but it's important to understand that as this develops over time, we are going to adjust this. So because of this bottom trend line, we could be looking at something more like that. That is totally possible. If that's the case, we'd be looking at this as the impulse, and this is the correction to move higher. So on the weekly, this takes time to play out, but on the weekly, then we'd definitely be seeing more upside for Kiwi yen. That's important to look at as a possibility. As far as the daily is concerned, we do have a breakout from our descending channel on the daily. And this was a nice setup because we did have those 3 touches on the top. We did have the 3 touches on the bottom. We had literally a quadruple bottom, which scares a lot of people. But here's the thing. If you'd taken a trade on this bottom, okay, you take a trade, this is a daily, but you wouldn't be taking a trade on daily, but I'm making a point here. So let's say you take a trade on the daily and then it reverses. All these trades, if you'd taken a trade on every single one of these, you would have at least taken a break even. You should have taken profit on these. And finally, if you had taken this last one, you would be in some decent profit. So don't let it, you know, if you see a pair retest an area, don't let it get you off. But understand what the market is telling you. So it's important to look at what the pattern is developing, and then finally it does take off. So let's look at the 1 hour. All right, profit management. That's a good question. I know a lot of you have been asking that. We'll talk about that in a moment. All right, so I don't need this. Let me see if I can get rid of that. There. All right. So this is what I'm looking at on the hourly for Kiwi yen. It's kind of this ascending pattern. It does appear that we've broken out, so we could rein this in, but we don't really have anywhere to go with it except to go back to here. All right. And if we do that, this is moving along this trend line. So I'm reining that in for now and just allowing the market to tell us what it is doing. But it is important to see this as an ascending channel. And what's interesting is we have the impulse, we have this correction, impulse, we have that corrective movement, but it doesn't give us that follow through. It moves up correctively here, then we get the impulse, and then it kind of moves sideways, and then we're seeing this, not really sideways, but low momentum. Then we're seeing this drop, corrective drop. The question here is, this is corrective. We should be expecting to see this type of movement. Let me draw this out here. See, it's bounced here. That would have been a decent entry. A buy entry, it doesn't mean it's going to follow through, but again, it would most likely give you an opportunity to take a break even. It would be likely to see this move to test this trend line area, that would be an area that I would look for if we're going to see this sell. Hold on a second, guys. All right, guys. Sorry about that. I had to deal with a I don't want to call it emergency, but little situation that came up. So we're probably going to have to cut this off here. I don't know. We'll run for maybe 30, 40 minutes more here, but we're going to definitely, we won't go for too long. But I do want to cover a few more pairs here, and just, I do want to get into Q&A. I think that there's a number of you guys in the course that had questions. I do want to give you the opportunity to really address those. So a couple of you mentioned the premium of Bitcoin in the chat. Before we get back into the Forex pairs, that is actually a really important note to make for anyone trading crypto and Bitcoin right now. And I'm just going to explain this briefly for those of you who don't understand. There's something called arbitrage, and it's basically the idea that if I can buy something, let's use stores for instance. So let's say that I can go to Walmart and I can buy a DeWalt power drill it's on sale for $20 and it retails for $100. Well, I could probably buy that drill, and because every other store is going to be selling it at retail value, I could put it on Craigslist or Facebook or eBay and make a premium. There's no reason for me not to do that unless there is a prohibition against it, or there's some reason that's going to prevent me from making a profit. So when you see a premium on Bitfinex and these other exchanges, all the exchanges that trade Tether, they have fake money, you have to ask the question, why aren't people going on there, buying Bitcoin on Bitstamp or Coinbase, GDX, moving it to Bitfinex, selling for a premium? Why wouldn't people do that? There's a reason why people aren't doing that. Smart money would be all over that. The reason why people are not doing that is because you can't get your money out of Bitfinex and it's fake money. So the reason it's a premium is because it's fake money and it's inflating. And eventually it's going to pop, and Tether's going to be seen for what it is, worthless garbage. And my opinion is most likely Bitfinex is going to exit scam. But by the time they do, I'm pretty sure that they'll have it planned out, and people on Bitfinex will be just stuck with Tether. But it is important to understand that crucial point. That arbitrage would equalize the playing field between all the exchanges, and it has in the past, if it wasn't for fake money. People don't want to move to Bitfinex. They're moving off from Bitfinex because it's fake money. You can't get the money out. If you go on Reddit, there's a bunch of people are talking about, there's people with a bunch of money. They're trying, $10,000 they're trying to withdraw, and they can't withdraw it because Bitfinex can't get good banking because, as far as I'm concerned, they're money laundering. So a little bit of a sidetrack there, but that is, that's what I'm looking at. That's what I think is going on anyways. So what I think we're talking about, this is impulse correction. I would like to see this move to the upside, and then see if we're going to get a sell. That would take that sell. To take a sell here, it just really doesn't make sense. You're opening yourself up in a situation there's no sell set up. Is this a buy setup? Well, you could possibly, you need about 30 pips. Right now, you'd be running nothing really, but it'd be above. You could take a break even. It's almost 3% to the top, and then almost between 4 and 5% to the top of the trend line. So that could be a buy setup. I'd be careful about getting in, waiting too long to get in, because there's no reason why this couldn't move to the middle and then reverse back down. If we get a tight corrective movement along here, that's a type of buy setup you want to look at. Totally worth getting in on a setup like that. But this is it is a flag pattern. The problem with flag patterns like this that have this kind of nature is they can just continue like this for quite a while. And then we just get a larger descending channel to move to the upside. So it is important to look at that possibility. On these type of trades, if you're going to take the trade, this was a third touch here. We did have that reversal in the candle. That would have been the time to take it. If it comes back down and double bottoms, that would be another entry. Again, just wait for that reversal. Don't get premature on that. But if we get back up to here, if we look at this on the 4 hour, let's see here. Yeah, it's totally possible that we could get back up to these highs. Let's see. We could put these in here. But again, we have to ask the question, if we're looking at this on the daily, for some reason it didn't want to. We have to ask ourselves the question. Descending channel, definite breakout. We have this very impulsive movement. Is this the time where it's just, as you see that retrace, is it retracing to move back in, or is it just forming a larger correction? We'd be expecting a larger correction at this point, right? So it's important to realize that a lot of times we're going to see very impulsive movement and people want to jump right in. But it's important to identify where those larger corrections happen. So we have impulse, tiny correction, impulse, basically a retrace, but a correction. Impulse, pennant correction. It's possible that this forms into a larger correction. Okay. If we get that type of thing, don't have a problem with that. We can get in on the next bottom here. So it's just understanding all the possibilities here. And if you're in on this trade, let's say you get in on that trade, it moves up here and then it retraces. Don't take a 1% loss on that. Take a break even. All right. That's important. If it's giving you, if the pattern's developing. Now, if let's say you take this trade here and then all of a sudden it just starts doing this type of thing. Do you close your trade? Absolutely not. Hopefully you stay in at the 1% because you should be below this area. It's just forming a descending channel to move higher. It's descending correction. So that's Kiwi Yen. This does look like it has a little bit more movement to the upside. And so I wouldn't be looking for any sell unless it gave us something else or we got to this area, but it still looks like upward potential to me. All right. See, I was going to check on Euro USD quickly here. All right, so the 4 hours just closed. Now that the 4 hour closed, what I'm going to do, because that's a very impulsive retrace, I'm going to move my trend line here, and I'm going to move it to like that. You'll notice we have 3 touches. So sometimes what the trend line, what you have, might appear to be the at the time to be the best, but as it develops, you see that and you're like, okay, that's where it belongs. 3 touches. So it makes sense. This makes sense. Doesn't mean that we can't go lower. Anything could happen. And we could totally get that corrective movement like that, and I could totally take a break even on this. That could happen as well. But this is a definite impulse, retrace, move off of a 3rd touch. It's a good entry. So I'm really happy that I took that entry. It does look like a good possibility. All right. That's awesome, Mike. I really hope that Kiwi Yen works out for you. All right. So, Andrew, a couple questions, good questions. You have profit management, where to take profits. I'm going to move into that for a moment. I think this is really important stuff. A number you are getting in on really good trades. I noticed in Slack, some of you are taking a little bit more risky trades. If that's in your style, that's okay. Everyone's style is different. But I've noticed some of you are taking really awesome trades, really great setups, and doing really well. The important question is, how do we manage those trades? That's a really important question. Okay. So before I address that, why did I move due to the impulse? Important. Move the trend line. Good question. So here's the reason why. So it was like that before. So 1, 2, 3. But here's the important thing. We break through the trend line, but we retrace back through. And you'll notice we're getting that impulse on the 4 hour as we speak. It's basically, people would call it a false breakout, but it's not really truly a false breakout. What it is the market's telling us your trend line is wrong. It belongs there. And once we do this, we notice, okay, well, there was 3 touches. That was a trend line. It is parallel to this. That was the channel all along. It's just we didn't have that last touch, so we didn't know. So it's not that you drew your trend line wrong. It's just you didn't have all the information. Once you get that, you're like, okay, 3 touches. Now, you don't just arbitrarily move it. For instance, I could actually do that and it still has 3 touches. But you don't just move it and be like, okay, well, I'm just going to hang this anywhere. It has to make sense. But now we have 3 touches. It's a parallel channel. It makes sense. So once we get that move off, there's no reason to have that trend line just cutting through price action. It doesn't make sense. So now we're seeing this as a move to the upside. We're going to see corrections in it, and there's going to be buy opportunities. So keep your eye on Euro USD. If you traded nothing but Euro USD for a month, if you took the best trades and really focused your skill, you should still be able to take 5, 10, 15, 20% out of the market just from Euro USD. It's possible. There's a lot of money in Euro USD. And a lot of times the setups are really good. All right, I want to talk about, hopefully that answered your question, Stratus. I want to talk about, I'm losing my train of thought, profit management, so trade management. So this is important. What we're going to do is we're going to break it down to the hourly because that's where we trade. You're not going to trade on the 4 hour, you're not going to trade on the daily, you're not going to trade on the weekly, and you really shouldn't trade too much on the 15 minute. It's more advanced trading. So let me draw this over here. Okay. So let me see. So this trade I took here, let's look at this for a moment. We'll use this as an example of managing a trade. So I took this trade. It turns out I took a 1% loss on it. The reason why I took a 1% loss is because of where I'd entered the trade, it's not the best trade in the world. It really isn't. I was taking this as a reversal in this area, double bottom, low momentum. I was taking it as reversal, but I understood the possibility that this turns out to be a flag and it moves lower. So had this moved a little bit higher and then started to move lower, I would have taken a break even. I would have totally taken a break even on it. But because it literally just moved down from my entry, I didn't have time to take a break even. As this moves down, it's very clear this is an impulse down, and it's very unlikely that I'm going to get out of that trade without taking a loss, and I didn't. So it's understanding that setting those entries is important. Had I got in the trade down here, most likely I would have taken a break even on it because I would have been watching the trade move to break even. So sometimes we take stop losses on trades just because we took entries that just really weren't the best. On this trade, it was a gamble I was willing to take. I knew it wasn't the best entry. It's not an entry I would recommend to you guys. But on the other hand, because of where my trend line was at the time, something like that, it was a possibility that was a reversal zone. Nobody knew it wasn't. So I was like, I'm going to take that as a chance. Didn't turn out to be the case, and I took a stop loss. But now I'm in on this trade. I'm going to most likely get my 1% back on that trade. Now, as this trade moves out, how do we manage this trade? Now, obviously, I have a wind off while I'm doing the videos. There's several reasons why I do that, but it is off. If it was on, you'd be able to see where my entry and the take profit is. Normally, how I do take profit on this, I'm going to actually move to select another broker here. I'm going to move to paper trading so I can hopefully explain this a little better. So let's see. We're going to just do a buy because we are very sketchy traders. Let's just do a buy for 250,000 units. We're going to do a stop loss for 25 pips. And we're going to do a take profit for 100 pips. I'm just doing this so I can show you guys. So I am definitely on a paper trading account. We'll do a market order. Give it a moment to click in. Okay. So there's our trade. So our stop loss is below, it's below this area. So if this was to come back down and retest, theoretically, we could still stay in the trade. Again, there was no entry here, so this was a dumb entry to take. But I'm doing it to show you guys for take profit. Take profit, I always, when I do trades, for some reason, I always just put in 75 pips and then I move it later, just because I like moving it, I guess. But what I usually do is I move it out of the range so that it's not going to get tagged out. There's no way, there's very little possibility that this just impulses overnight and hits that and takes me out. If it does, I'm going to be a happy camper because it's going to be literally like 15%. I want that out of the way because I want to manage this trade based on what the market is doing. So let's say we entered down here, okay? We impulse and we're at this level here. And then suddenly we start to get, a little bit movement down like this. We impulse up and then we're moving around a little bit like that. And then we move down and then we start doing something like that. How long are you going to wait until you start taking profit on this? So you get that flag. Okay, it's a buy. You're going to wait for that. There's no reason not to. It impulses up. You go, okay, well, maybe it's a flag as well. It turns out it's a reversal. Are you going to take profit at this level? Or are you going to wait and be like, you know what? It'll probably still go up. These are the questions you have to ask yourself. What is the market developing here? Now, you could totally say that maybe this is a bigger bull flag to move higher. That's always a possibility. But what if it's not? What if for some reason we're moving back down and you take a stop or you take a break even on it when you were in 2%, 3% profit. So here's a couple of things to consider when you're taking trades. Now this is reversing right now. Not reversing, but we're seeing a bearish candle. If you're in a trade and you're running, let's say, 2% profit, you should, if it starts to change, traction, you start to see a bearish candle, you should not be emotionally attached where you're like, well, I'm not giving any profit back to the market. I'm just going to get out of the trade. The reason is because there is almost always, for instance, in this trade here, there's almost always going to be a retrace candle, even when you're still in that impulsive movement. So to wait for that hourly to close makes sense. Now, if this closed like this, there's a good chance that something else is going on. But throughout these, you have impulse, you have a retrace, you have a retrace. 2 retraces, it still goes, but then you start to get this movement here. Now what's going on? It's a tight corrective movement. As this develops, this is going to be easier if I actually do this. Let's do the replay. This will be easier. Okay. All right. So we take an entry on this. So we're like, okay, double top, trend line, we're going to take an entry. We're going to take 16 pips. You got to be careful with those are tight. We're going to take a 16 pip. And then we're going to do this. Okay, so we're in profit. At what point do we move it to break even? So we wait. We see this long wick candle. We should be paying attention here. And at this point, I would be moving to a break even. The reason is we get this impulsive move off. We have 2 low test wicks. If this moves back up, most likely it's going to give us a new entry and we can get back in. There's no guarantee if this moves back up that we're not going to get stopped out. It's not moving in a way that would give us, for instance, let's say that the next few candles go like this. Then I would consider not taking moving to break even because that's still a movement to the downside. So let's watch. Okay, so we almost got taken out. If volatility could have got taken out, but you almost get taken out. We're still moving down. All right, so now we're doing good in profit. We're in profit. 1.4%. So something like this, you might want to say, okay, I'm going to move this to 1%. So you move your take profit or your stop loss. You wouldn't take profit. You'd move your stop loss to 1%. And you'd say, okay, I'm going to take 1%. The question you have to ask yourself, is that a wise decision here? Again, what if this is forming a corrective movement like this? You get tagged out for 1% and then it goes. Okay, so important questions to ask. If you took a 1%, would it be the worst thing in the world? No, but you're risking 1% to get 1%. It's not the best trade in the world. So you got to be very careful that you're not handicapping your profits. So if you're going to move this to 1% or 1.5, or don't ever take profit lower than 1%. I've done it. I do sometimes if I notice that it's just moving out on me. But don't get in the habit. It's a bad habit. But is there anything wrong with that? Not necessarily. But the question is am I handicapping the potential? So the next candle here. Okay, so we wouldn't have got taken out. That would have been okay. But that didn't give us any breathing room either. So there's no breathing room for this to be the correction to move lower. So these are the things you have to ask yourself. If I move it, my stop loss to 1% right there, was that a wise decision? Probably not. So it would have been wise to keep that at break even, in my opinion. Take the risk of a break even, losing 1%, rather than losing the potential of taking a 5% trade, at least for this one. So now we get that move back up. At this point, now Would it be wise? Okay, now maybe I would take that and move it to 1%. All right. So we're getting that moved down. We get another retrace candle. Another retrace. Okay, this might be forming a flag. Of course, we know what happens, but let's pretend. All right, so this looks like a flag. Not quite enough time to make a decent entry on it, but it looks like a flag. Okay, so you could take that. Technically, you have 6 hours. I would prefer these to come back up here and take them on the top. That's my preference. You could definitely have taken that as a break, as a scale in. It does move back up. So would you have taken this trade? This is the question here. You're worried about profit. Would you have taken this as a flag to continue lower? Would that have been a wise trade? So let's say we're going to take that as a trade. We're going to get in with a 15 pip. We don't go lower than 15 pips because of volatility. Of course, we know what's going to happen here, but almost got stopped out. We would have got stopped out if it was lower than 15 pips. So we're in profit there. Now, this is literally how I would manage the trade if I was taking this trade. So even though I know it's already happened, it's important to understand that. So we're running 4.5% on the one trade. Now we got a new trade. Okay, at this point, I would be at break even. The reason is that this looks like a flag. If this moves back up, it's probably forming a bigger flag. I don't want to take a loss on my scale-in. So we almost get taken out. We get taken out. All right, so that one's gone. That was a break-even trade. Now we could look at the possibility of this being the larger flag. We get those 3 touches and then the move to the downside. So we could take another entry on that if we wanted to. So far, there's no reason to get out of this trade. I guess that's the point I'm trying to make so far. There's no reason to be getting out of this trade. Now we're seeing this low momentum corrective movement up. I wouldn't be getting out yet. That turns out that is a flag. Now this is where you start to really pay attention. We notice we're not getting those big momentum candles. We're getting a few low momentum drops and then a correction. This is where it starts to give you the indication that the market is potentially slowing down. Then we see this. We see a full retrace followed by another candle. Doesn't mean that we don't have more downside. It just means that we could see more retrace, a larger retrace. Okay, so here's the thing. We went down to 9%. If we got out here, it'd be 8%. What I would do in a case like this is we have this correction. I would be locking in profit somewhere around this area. If it's going to move back up and still continue down, it's probably going to form a flag. So you'd want to keep that in consideration where you'd move this, but I wouldn't be moving it too far up. You don't want to go from 9% to 6%. It doesn't really make any sense to do that. Okay, as we let this move down. Now, notice that we're not making progression in the market right now. Okay, we're getting a descending corrective movement. We're getting this area here where nothing's really happening. It's just kind of moving back and forth. And now we start to get this. Impulse, this could be a correction. We get that downside. Again, very corrective movement. So it's in areas where this, like this, if I'm still in this trade, that I'm going to be very careful not to give back profit to the market. If this turns out to be forming a bigger flag pattern, I'm not going to wait for it to come back up here. Take me into 4% profit to go back down. I'm going to cash in on my profit. So I'm going to keep an eye on how this is moving. So we get that drop. We're getting impulse corrections, small impulse and corrections. and we still get downside still. So to take a profit in this area just because it was corrective would have hampered us from taking, it gets down to here. That's 13%. Okay. Now, this is where we start to pay attention. We had that descending corrective. We do get the impulse out of it. But we have to be paying attention to the slowing momentum, the possibility of this reversing, especially since this is a descending corrective channel. So we know that this is coming to the upside. We know that that's going to happen. All right. So this area, this is definitely, I would be setting in here to take and lock in my profit somewhere in that area. I probably would have got taken out by that. Simply because, especially since I took a buy on this, if I'm looking at a buy, I definitely wouldn't be staying in a sell. So I would have flipped it probably at this point. But that was a almost 13% trade. But at any point, we could have taken out for 2.4%. We could have taken out for 1.3 at that retrace. When it moved back up here, it's really understanding that for a small correction like this, I'm going to stay in. But if we're forming a bigger correction, I'm definitely not staying in for that. I'm not going to come back up to a break even, take, 5-6% trade and give it back to the market. It's not going to happen. So looking at that gives us clarity in the market to really understand that I don't want to handicap my profits. I don't want to get so emotionally attached. It's like, well, I'm not taking a break even on this. Even if it's 1%, I'm going to take 1%. If you're going to take 1%, there has to be a reason why. Is the market developing something bigger? Is that why you're taking a 1%? Or are you just emotionally attached to taking something out of the market? And if you're emotionally attached to taking something out of the market, it's a wrong reason to be trading. Or wrong reason to be closing that trade. Very, very, very important that we understand that. Because you're going to get these trades that form these type of movements that look like this could reverse, could it not? But you have to also understand it's a descending corrective nature, but it's in the middle of nowhere. So yes, it could reverse from here, totally. And if it started to do that, we'd be taking profit on that, totally, 100%. I would not wait for it. But these do not always reverse when they're in the middle of nowhere. It totally is an art form. It really takes experience. It's really, it's like riding a bike. When you were little and your father, sat you down on the bike and he's holding the handlebars. And he's like, you most likely have training wheels. He's like, here's how you ride the bike. You got to hold your balance, and you're going to want to stick your foot out because you're going to feel like you're falling. But if you do that, you're going to fall. You're going to lose your balance. You got to trust yourself. But I guarantee you, none of you watching went out there the first time to ride the bike and were like, blew it right out of the water. I guarantee you all of you fell at least once, probably several times, 10, 20 times, because it's experience. You have to have that experience of falling before you're going to get the experience of riding. But once you get the hang of it, then you're, doing wheelies. You're able to make turns at high speeds. Maybe that's not safe. But you get the picture. You're able to do a lot of things with the bike that, as a little boy or a little girl trying to ride that bike with training wheels, seemed daunting. That's the way trading is. It's understanding that there's an experience that comes with trading. We do this and we teach it. We know what we're doing. I mean, I really think we know what we're doing. We know how the market moves. But even though we do, I still take trades like that don't pan out. I still take trades where I'm taking 5% and it goes on to make 10%. Don't beat yourself up over that. It's just understanding, could I have done better on that trade? Did I get out too early? Did I not set that up quite correctly. You know, those are questions you ask yourself. Start a journal, write in a journal, you know, get Evernote, you know, make notes, take pictures of your trades and go back and review them. This type of stuff is going to be powerful. So hopefully that's helpful in explaining that. A couple other things I want to address. I am going to do a video on stop loss. It's either going to go to the channel or it's going to go to the course, but it will be coming out. But I did want to cover a couple things in stop loss because after my last video, I got a couple comments from people that really do not understand trading. And they made some comments that I really want to clarify so that people don't misunderstand some really basic terms of trading. So we're just going to look at this tool for a moment. It's important to understand a couple of things. So we go to settings here. This is our risk is 1%. So when I set this to 25 pips, what I'm saying is this is 1% of my account risk. This middle number here, the risk reward ratio, that's a percentage of profit if it moves up to this point. That's why it changes as we move this. This number here is the percentage of movement in the market. This is, or you know, from that point, the middle point, our entry point, and this is the percentage of movement in the negative. This is not your loss. This is not your profit. We've had several comments where people want to believe that. That's not your profit. If you're trading 1%, this is your profit, and 1% is always your loss. So if you hit stop loss, it's always going to be 1%. It will always be 1%. It's really, really crucial that you get your head around that, because if you don't understand that, you're going to be making trades where you're losing 2% or 3% or 5%. You know, you got to be consistent. Okay, so we set up our trade here just to kind of show you. So 25 pips, let's say that that is what we decided. Make sure that this is 1%. Make sure that that's 1%. If you change this, you'll notice it figures out the units for you. You don't have to worry about the dollar. You don't have to worry about the units. It figures it out for you. So that's 1%. Always trade with 1% stop loss. Now, where the stop loss is going to be in pips is going to be based on where your entry is. So if we took an entry on this, we would need it to be below the low. This wouldn't be the best of entry based on where our trend line is now, but so it would be a minimum of 16 pips. Because of where it is, I'd want 20 to 25 pips. But let's say we did 20. So we would set this to 20. You'll notice that as I change that, it changes the amount of units I'm trading, but the risk remains the same. This is how this works. So the lower the pip value and stop, the greater our profit potential. But also, we have to understand that just arbitrarily changing our stop loss could set us up to be stopped out, and then the trade still goes without us. So I've noticed a couple of people are doing 5 or 10 pip stop losses. That is very risky, especially if you're trading the standard spread. Right now, Euro USD, the standard spread is 1.3 pips. That means if you're taking a trade with a 10 pip stop, you have the potential to be tagged in 1.3 pips into that, which basically leaves you with, 8.7 pip stop loss. So you're already into your stop loss because of the spread potentially. And you're not giving it room for the market to breathe. You could be wicked out very easily. So 15 pips is the minimum that I would ever take on a stop. 20 to 25 is like that sweet spot for me for trading. There's nothing wrong with taking a 30 to 35 pip. Some trades, especially pairs, yen pairs, sometimes you'll be taking a 50, pip stop. But the pip size is always based on ensuring that if we retest that area or we get wicked down, if you're coming into an area to make a trade, you're looking for an entry, but just before that entry, you see these huge wicks. taking a 15 pip stop loss may be really risky. So it's really understanding that it really does matter, that the pip value we set for our stop loss makes sense. But no matter whatever we set that pip value to, it will figure out how many units we're trading. So we're always trading 1% of our account for a loss. That's kind of how it works. But again, I'm going to be doing a video on it, just explaining, breaking it down, looking at entries and stuff. So we will be doing that. All right. So anyone have any other questions on managing trades, stop losses or anything in regards to that? For some of you, this might be completely beginner level to you, but I know a lot of you, it's something that really you don't see people explaining, so it's new to you, and there's nothing wrong with asking that question. Do you ever limit order in a 0 pips? I assume what you're asking is, do I ever set a limit order without a stop loss? I mean, if I set a limit order, obviously I don't have to worry about the spread. It's not the same as setting a market order where that spread's going to kick around and, But at the same time, I will always, even if whether I'm doing a limit order, for instance, a lot of times I will wait for the retrace. That's the best way to trade for most of the time. But if I was looking at this and I already had 2 touches and I was looking at this for a 3rd touch and there was a lot of confluence, there was just a lot of reason to take this trade. And I was expecting a lot of volatility. Like, for instance, I was expecting this to really rebound right off from it. Then I might do, let's see, I'd go down here. I might do I might do a limit order. There's nothing wrong with limit orders at all. They do have benefits. The thing with limit orders or stops that you have to be very careful about is the validity of the entry. So when you're doing a market order on a retrace candle, you have a reason. You have the retrace, you have the bounce off the trend line. It makes sense. If you're making a limit order, you have to have a real good reason for making that trade. So for instance, I know some people, they will see a flag and they'll set a limit order for a break on the flag. It can work out, but it can also break down below where you thought the flag was and then move higher. I'm trying to understand your question. With a limit order, you're basically supposed to get, the broker is supposed to enter that trade for you either at the price you set or a better price. So for instance, if I set a limit order, a buy order here, it should either enter exactly at that price or below that price. So better than. I shouldn't be getting tagged in higher because it is a limit order. So a limit order is always technically, I guess, what you're calling 0 pips or, what I target. That's what a limit order is supposed to be. And for Oanda and also for Forex.com, Forex.com specifically, and Oanda does do it, I noticed, but Forex.com specifically says that they do try to get you the best price for limit order. So they try to get you a better price than you're actually bidding. For a trailing stop, the way I do trailing stops when I do use them, I don't use them for every trade, but I will sometimes, especially if I'm traveling in a flight or if I'm going to sleep and I just don't feel comfortable in a trade. What we talked about before was moving the stop loss. And basically how that works is as this moves into profit, I can move my stop loss. I can't with this tool. It won't let me, but I can here. So I can actually move this as we move up in profit. I can move it behind. And I can use that as a take profit in case we retrace. So that's something you can do. As far as using a trailing stop, Wanda does support it natively. So if you are using a Wanda, you can add a trailing stop. TradingView doesn't support that right now. So you'd have to use the Wanda interface. I wouldn't enter a trade with 15 pips and then set a trailing stop loss. The reason why is if you leave that trade and it moves, let's say 10 pips into profit and then moves back down, you're going to get stopped out in the middle of your range, and you specifically set a specific stop loss because it made sense. So you don't want that type of thing to happen. So if I set a trailing stop, it's going to be once I'm decently into profit usually, and then I will base it on momentum. So if we have decent momentum that's pushing us, I might set, a 20 or a 30 pip stop loss, usually a 20 or 25 pip. And the reason I might do that is if I'm at so we get up to here, and I'm like, there's a decent chance we're going to reverse at this trend line, let's say. But I'm going to bet. I might set a trailing stop, 20 pips away. That way, if we get up here and we reverse, then it's going to take me out. The problem with that is if you move up and then we just get that corrective movement down and it tags you out for the trailing stop and it still goes. If you're sleeping, you're not going to know to move it. So it is a catch, and it is something you have to be careful about using. But trailing stops work really well in certain instances, but in other instances you have to be very careful. So I wouldn't use them on any trade. I use them in specific trading scenarios. Alrighty. We're running up here on 2 hours. We're going to close this out fairly shortly. If you have any other questions, you want to drop them in the chat, we'll be happy to answer them. Why do you think you're misusing the limit order, Andrew? How are you using it? Let's look at the DXY quickly here. What I would really like to see for this, it may not happen, what I'd really like to see is this just correct like this. That would be absolutely lovely to see that drop. It also could move up to retest that area, or just move up and then come back down. Double tops happen quite often in those areas. So I'm not going to be put off by this trade if it does move up to retest that or retest this low. And then I'll just take a new entry on that. But let's see British pound. What's British pound? British pound is interesting because we do have... This is one of those things that, you have to be careful not beating yourself up, because last month I took Euro USD and British pound just cleanly went into literally 12%. I mean, this went up to went over 12%. It literally just cleanly went up to 12%, like ridiculously fast. And I didn't get that trade. I was looking at the trade. I set this here. I was looking at that as an entry. I didn't take it. So it happens. You get those opportunities where you see it. You're going to take it. You're like, well, there's Euro USD or British Pound USD. I'm not going to take them both. You take the one and the other one goes. It happens. You can't beat yourself up over that. But because this moved so aggressively, sometimes we see where the other pair, Euro USD, might go more aggressively next time. Sometimes they switch. What's interesting here is we have that double bottom in the middle of nowhere. So you have to be careful on trades like that. It'd be more likely for this to form a bigger correction and still move to the downside. But If it's going to move up, we're looking at that area, and we're looking again for this a correction, a flag to give us a entry. I was looking at potentially taking an entry on this, but I'm not going to take an entry in the middle of nowhere just because it looks like a double bottom. You know? But if you'd taken it, you could take a break even on it. The problem with doing something like that, I guess I think I understand better what you're saying. If we were to break this down to the 15-minute here. So if I was to go like this, and I'd do a buy on this. So market, and then I do a limit order. So what you're basically saying is I guess it didn't change it. Yeah, it did. So buy. Just have it at market, but be a limit. The problem with this is that you're not guaranteed it will be tagged in, especially if suddenly you get an impulse. If your limit entry order is right on the same as market, there's no guarantee that the broker is actually going to fill that for you. The benefit of limit orders for the broker is that you're giving the broker a heads up that I'm buying this at this specific price, and they can fill that order for you. When you're trying to fill a limit order at market price and the market's moving in an impulse, or suddenly is moving, or there's volatility, the broker is not going to guarantee you to fill that order. That's why the market order is there, because the market order, the broker says, I'm going to try to get you the price that the market's at, but I'm not guaranteeing it. There is a two pip spread, so you might get a little better or a little worse. Most likely for a market order, it's going to be a little worse. So if you're going to do limit orders for an entry, you do want to give it a little bit of cushion so it's not right on market. If the spread is 1.4 pips, you're going to want to be at least 1 to 2 pips above market to get into that trade. If you do that type of thing, most likely the broker is going to fill it. If you do it right on market, there's a decent chance it's going to fill it because there's so much money flowing in the market. It's just if you do suddenly get that impulse, and I've had this happen before when I was using entry orders all the time, where I would set an entry right, kind of like you were doing, and it would just impulse right through it. This happens a lot more in Bitcoin, like BitMEX does it a ton, but it's just something to consider. It's not as big of a deal. Probably it's just understand that there's a possibility your trade's not going to get filled. Yeah, we're going to close the stream out here in 5 minutes. So if anyone has any questions before we close out, anything we didn't get to discuss, anything you might have a question on. Got a little bit of an impulse on Bitcoin. If you are if you signed up for the course here in Slack, then feel free to ask us questions in Slack. There's a few of you that I'm going to be getting back to. You sent me private messages. I will be getting back to those. Don't be afraid to follow up. Let me know. U.S. oil is interesting. I can't trade U.S. oil. I've been asked about U.S. oil by a couple of you, but I can't trade it. But I just want to show you this quickly before we close it out. Just the amazing profit in U.S. oil. I mean, this goes back to, let's see, it's only the beginning of October. So there's 6% in that trade. You got this flag, beautiful impulse. You got flag, decent impulse, not the best. You got a flag, you got an impulse. These are 3, 5, 6, 7, 8, 10% trades. This is a little bit messier. If you'd taken a trade on this, you would have taken break even probably because it kind of messed around. But you get that flag, breaks down, flag, breaks down, flag, breaks down. A little bit messier here again. You would have taken a break even. Then we get this larger flag and we're kind of at the bottom. But my point is man, U.S. oil has been really, really smooth. Like, I really wish I could trade U.S. oil. I would have done really well in the last month in U.S. oil. Just tons of profit. Probably 20% easily in the last month on U.S. oil. We are looking at, I'm just going to show you this on the daily here. This is amazing to me. So it's $107 a barrel. Beautiful impulse, correction, impulse, small correction. This is the bigger correction. So this is the bigger correction. We are looking for this to move to downside. Statistically, $26 a barrel is a target for U.S. oil. In reality, we've seen where they prop up the price of oil. So will it get there? I don't know. But this will drop out eventually. I mean, it is impulsing right now, but it's going to drop a little bit lower. I would expect at least $40 a barrel. But 27 to 24 is still a possibility. But it just looking at the beauty of U.S. oil, if you can trade it, really start charting U.S. oil because it's really, really got some amazing trades. So. All right, guys, we're going to close this out. Hopefully you've learned something from this live stream. If you want to know more about trading, click the link in the description to look at the course. There's a lot of amazing people in the Slack group, a lot of camaraderie, and really encouraging and helping each other out. You know, a lot of people answering questions and sharing what they're looking at. And we're in the Slack group answering questions as well. So I'd really encourage you to sign up for that. If you're serious about trading, seriously put in the effort. Really make the time and put in the investment. Invest the time, invest the money in really learning how to trade. This is how the market moves. This is how the market moves. And when you master this, you can trade full time from anywhere in the world, and you can make a full-time income. You can make more than a full-time income, and you can do really well. It's just put in the effort now. Really put in the time and effort. Make it a reality if this is what you want. Thanks so much, guys, for watching. Thanks so much for sticking it out here. If you have further questions, shoot us a message on bitrage.com. If you're in the Slack group, shoot us a message on there. Drop a comment below. Tell us what you thought of the live stream. Thanks so much for watching, and take care.